Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that's been buying up infrared technology. It's LightPath Technologies. Get ready, because this report involves more numbers than a calculator convention. We're looking at an amendment to a previous report all about LightPath Technologies buying another company called G5 Infrared. This means new financials, new strategies, and potentially a whole new direction for LightPath. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. This report is basically an update, what's called an amendment to a previous filing. The reason for the update: LightPath Technologies acquired, meaning bought, G5 Infrared. Because of this purchase, they need to include G5 Infrared's financial statements and some pro forma or what if financial information. Think of it as adding a new wing to a house and needing to update the blueprints. The company agreed to buy G5 Infrared from its owners. This deal, called the transaction, closed a while ago. This report is just catching up on all the necessary paperwork details. Now we get to the interesting stuff, the financials. This section includes the financial statements of G5 Infrared, which are basically a report card on how well they were doing before LightPath bought them. It also includes pro forma financial information, which shows what LightPath's financials would look like if they had owned G5 Infrared for the longer period. Here we have the audited financial statements of G5 Infrared. This is like a doctor giving a checkup, but for a company's finances. The report covers their balance sheets, which shows what they owned and owed, their income statements, which show how much money they made, and their cash flow statements, which show how cash moved in and out of the company. These are just legal documents basically saying that the accountants are okay with their work being included in this report. Alright, time to dive into the G5 Infrared numbers. Let's find out how healthy this company really was before the acquisition. Looking at their balance sheet as of the end of December 2024, G5 Infrared had about $859,000 in cash and equivalents. This is the amount of money they have that is accessible for use. That's a decent chunk of change for a company about to be bought. G5 Infrared's net accounts receivable stands at about $437,000. That's money owed to them by customers, but they don't have in hand yet. Their total current assets, the total assets that are easily accessible in cash, stands at about $1.78 million, a decent number for a small company like that. It also suggests they weren't struggling to pay their short-term bills. The total assets, meaning everything the company owns, was about $227 million. This gives you a sense of the overall scale of G5 Infrared before the acquisition. Turning to their liabilities, things they owe, accounts payable, which are short-term bills they needed to pay, are at about $155,000. Total current liabilities, all the short-term debts they owe, amount to roughly $363,000. Total liabilities or debts the company owes total about $457,000. Members' equity is essentially the company's net worth, the amount left over if they sold everything and paid off all their debts. G5 Infrared's members' equity was about $1.8 million. Total liabilities and members' equity, or debt plus net worth, equal $2.27 million. Matching total assets. This is a fundamental accounting equation that always has to balance. Think of it as 2 cas A2 always equaling 4 pol. Now let's look at their income statement, which is how much money they made and how much they spent. For the year of 2024, G5 Infrared had net sales of about $3.8 million. That is the revenue they received for their products after discounts. Their cost of goods sold was about $2.1 million, which is the direct cost of producing those products. That leaves a gross profit of about $1.7 million, which is revenue minus the cost of goods sold. This shows how efficiently G5 Infrared was at producing its products. They spent about $440,000 on sales and marketing. General and administrative expenses were about $525,000. These are the costs of running the business that aren't directly related to production or sales. Research and development costs were about $282,000, which shows they were investing in new products and technologies. Total operating expenses, all the costs of running the business, are about $1.2 million. That leaves an operating income of roughly $492,000. This is the profit they made from their core business operations before accounting for interest or taxes. After all expenses, G5 Infrared had a net income of about $380,000. This is their bottom line profit, the amount of money they actually made after all the bills were paid. Looking at their cash flow statement, G5 Infrared's net cash provided by operating activities was about $526,000. This is the cash they generated from their day-to-day business operations. They spent about $53,000 on the purchase of property and equipment. This shows they were investing in their business. Overall, their cash and cash equivalents increased by about $474,000 during the year. Now, let's check out the pro forma financials. This section gives an idea of what LightPath's balance sheet would look like if the acquisition had happened earlier. Looking at the pro forma balance sheet of LightPath Technologies, if they had fully acquired G5 Infrared, their cash and cash equivalents would have been $11.9 million as of December. Their net accounts receivable would have been around $328 million. Total current assets stand at $18.4 million. And their total assets, if they had already owned G5 Infrared, would have been approximately $3 million. Checking pro forma liabilities, accounts payable would have been $1.2 million. Total current liabilities would have been at $4.7 million. Total liabilities would have been $8.8 million. And stockholders' equity, the value of the company to its owners, would have been about $21.5 million. Okay, let's check out LightPath's pro forma income statements as if they had owned G5 Infrared for the last year. If they had owned G5 Infrared, their net sales, what they earned after returns, would have been $47.1 million for the year. Their cost of goods sold would have been $28.5 million. The pro forma gross profit would have been about $18.6 million. Sales and marketing expenses would have been $4.8 million. General and administrative expenses would have been $7.9 million. Research and development expenses would have been about $3.2 million. And total operating expenses would have reached $16 million. The combined operating income would have been roughly $2.6 million. However, after all expenses including interest, their net loss would have been around $2.5 million. Looking at the last 6 months, their net sales, if combined, would have been $23.1 million. Cost of goods sold would have been $14 million. Gross profit would have been $9.11 million. Sales and marketing expenses would have been $2.3 million. General and administrative expenses would have been $3.9 million. Research and development expenses were around $1.6 million. Total operating expenses would have been $7.8 million, giving an operating income, a profit from operations of $1.3 million. However, again, after all expenses, their net loss would have been around $1.2 million for those 6 months. This is just a file that lets computers read the data in this report, but it isn't something that is useful to the average person. So, what does this all mean? LightPath Technologies has acquired G5 Infrared, and this report shows the financials of both companies, both separately and combined. The idea is to give investors a clearer picture of what LightPath looks like with G5 Infrared under its wing. The acquisition diversifies LightPath's capabilities and market reach, particularly in infrared technology. However, the pro forma numbers show that even with the added revenue from G5 Infrared, LightPath would still be operating at a loss, meaning they are spending more than they are making. This suggests that LightPath needs to either cut costs, increase sales, or find other ways to improve its profitability, or this acquisition might not pay off like they think it will. LightPath is making a bet that combining with G5 Infrared will create a stronger, more competitive company. However, the financials suggest that it has work to do to make this acquisition truly successful. Alright, that's our breakdown of LightPath Technologies' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.